Good now, revolutionaries, and welcome to the Rise Up Morning Show. Yes, this is your place for helpful news, commentary, affirmative answers to your crypto questions, and today we are excited in a little while to welcome back our friend, most returning guest, co-founder of Tether, Mr. William Quigley, to talk about what is surely the biggest news story of the moment and maybe many moments, OpenUSD's launch. But first, if you've got a question about crypto, blockchain, Web3, maybe you don't know how it works, maybe you don't know why it matters, we want to hear from you. If you're listening live, put your question in the comments. If you're listening in the future, we hope your candles are green and that you will write your questions on the back of a Bitcoin, a $20 bill, or just join us in the community at community.rumshq.com, where they live forever. It's the place the show is 24/7 live. The only thing missing is you. Will, Alex, and I are already in it. We're talking about everything. The USD stuff, the Pacifica stuff. You want to start with perps trading? We've all become these little bitty perps traders.
Little itty bitty baby ones. Yeah, so I made a little bit of a, not necessarily mistake, but just a lack of experience of playing with leverage, because for the most part I've just been like a spot swing trader. But I'm in it. I'm playing with margin and having some fun. And last night I wanted to take like some more money because I've just been playing with smaller funds on leverage, and I was like, okay, cool. Hey, let's take like a little bit of money here. That's not just inconsequential funds, and let's just step it up one notch, right? Taking one extra step into the pool. So I took some money, took it over to Pacifica, deposited the funds, and then I went to bed and I was like, yeah, I'll wake up in the morning and I'll find a trade that I want to do. And so I woke up this morning and I was like, okay, cool. I think I found a trade that I want to do. Went on Pacifica, and then I went to go set my trade. And it's like, you don't have any funds for this. You already have an active position. I was like, I deposited my funds. Like, what's happening here? Why can't I use them? And what it did is it took my funds and it just added it to my open position. So the position that's being traded, it has not increased in size, but now I have like that money backing that position. So I had a short open on Bitcoin, and now my liquidation price on it is $173,000 or $178,000. So I was like, okay, well, that kind of sucks a little bit because I was going to set another trade, but at the same time, at least I don't really have to worry about the short getting liquidated. So, okay, all right, well, that's fine. And then
liquidated.
Yeah, and then Evan, you gave me advice. I have to toggle between two different things. Can you remind me what those are again?
I would love to remind you, if you want to play along at home, turn your VPNs on. If you live in the US, then go to app.pacifica.fi, and you will see this lovely dashboard. It's familiar to my friends who are practiced traders, swing traders, leverage traders, but if you're looking at it for the first time, it's kind of intimidating. And honestly, I think Pacifica, even though it's pretty good as far as these things go, could be more intuitive. The thing you want to understand is at the top right here, there's a button that says cross. This is like your position opening dashboard. I can open a position on this or that asset right here using all of these different buttons to set all my different parameters before the plane takes off. Cross is what this button says right now. And that means that all of the funds in my account will be used across all my positions to make sure they don't get liquidated. If one of them gets liquidated, everything gets liquidated. Whereas if you are using isolated margin, when you click that button, it gives you the option to change to isolated. Each position uses its own margin as collateral. So you're not going to have as high or low of a liquidation threshold, but if one position goes under, you got 10 positions open, you don't have to worry about losing everything you put in the account. Very helpful if you want to open more than one trade. Then you click confirm margin mode and then go about your day to set the rest of your order. You can do all kinds of fun things on here. Who's up so far? I feel like Lifetime will, because you've traded forever, you're up.
Definitely will.
But recently, Alex has had some big wins too.
Alex, you're like what, like 6 for 7 on your leverage trades right now, something like that?
Yes. Yeah, I've lost 2.
Okay, so like 6 for 8.
I'm 7 for 9 right now.
7 for 9. I mean, that's great. That's absolutely wonderful. I'm at something like, and I've been playing around with different strategies, and I've had some that have worked and haven't worked, and I'm at like 11 for 16 or 11 for 15 over the past like week and a half. Dude. It's the most trades I've ever done in my life, because I'm just like, I'm trying to figure out, like, I'm not a short-term trader, so I have a whole bunch of indicators and I'm trying different combinations of them, and I'm trying to go back on the chart and try to find certain things that would work and wouldn't work based on the past. And so I'm just kind of playing around with a few things, because again, I'm not a short-term trader. And I think what ultimately is going to happen is ultimately I'm going to say, hey, like, I need to take some more time to study short-term trades. Like, I need to go chat with a few people and just kind of like get their methods and play around with it on paper first, and then play with more of my current style, which is using less leverage, which is less fun, but using less leverage, but just doing my usual swing trades and just having some positions open for longer might be what I ultimately end up doing. But I am having fun trying to like learn something new. It's been exciting.
That's my go-to.
Yeah,
go ahead.
The secret to my success, while barely knowing what I'm doing with regards to like picking a winning direction or whatever, has been honestly to follow the advice of the illustrious white whale himself, in just saying, hey, I'm going to do this for a short period of time. It's a scalp. Profit is profit. Taking my own advice there and recognizing that, and actually that's been my failure. Both times that the trade has lost has been not taking my own advice properly and letting greed take over that kind of like voice in the back of my head. Like, okay, well, your last one was a bigger win. This one should go in the right direction, because clearly you're a genius and clearly you're on fire right now.
Oh, one of my losses also didn't have anything to do with strategy. I just got greedy because I was like, oh, I could turn this into like a 600% win. Yeah, and it was at like 170%. And I was like, I can just get more. And then it was like, would you like to be liquidated? And I was like,
no, dude, that was it. It went, so I opened a short. It went down, but not very far. I think I was only, in profit like $25. It was just like barely under. But then it really started to like sit there. And, to my mostly untrained eye, it just looked like it was forming like a little support there, at least on this tiny time frame that I was looking at, because I'm not going to get up from my desk and like leave it open. I'm not that confident. And I was like, oh, well, this looks like it could turn. I was like, no, but it might also just like get tired here and then fall farther. And then part of me was like, just close it. Like, we don't feel good about this. I don't know. I don't have any confidence right now. So close it and walk away and like reset later. And then I didn't do that. And then I got stopped out.
Yeah.
So at least for that, no liquidation, but it did hit my stop loss, and ultimately then I lost.
The same lesson happened for me. Once again, if you're in podcast land, you'll have to deal with the description orally. I opened a position that was a short on Sol at like a couple minutes into office hours last week, when it was Sol and nobody else going up, and Bitcoin was going down. And I was like, no, this is the right trade, because it's got to come down. Bitcoin's going to pull it right down. I was, let me say, correct, but I also got greedy. I set my stop loss at $69.06, and I got great downward momentum. At one point, it was down here at like almost $3 under my buy price, and I was in profit a significant amount, like a couple dozen percent. But I got greedy because I thought for sure it would go lower, and then it noodled. It just went sideways, and then it started to go up. Yep. I stayed in the trade too long because I was making a decision based on what was the thesis instead of, in that moment, what is the thesis. Exactly. Yep. I should have taken profits and then seen all the hype around Ansem, everything else, and no, this thing's got $2.5 more to go up. I would have bet both sides. I, like Will, am not a short-term trader. I prefer to go with like the trend over a longer term. I hate being active at my desk, and as a result, I just, fell victim to one of the oldest traps in the book. I have left this position open because I'm playing with like a handful of dollars, and I know Sol's going back down eventually, and I'm at this point, it's about the pride of the victory. You know what I mean? Like, I can't have my first trade on Pacifica be a loss. Now, we do have some questions.
I was muted. Your liquidation price was $89.78.
Yeah.
You could be fine. You need to see Solana fail 73.50. To fail 73.50, you're going to be golden. You're going to be golden. Keep that short open, and you're going to be fine. Yeah, keep willing that into existence. That's a good strategy. And so it's a really good strategy, man. It's all about manifesting, right? That's
I can think of one other crypto that's just been trying to will that kind of success into existence for I don't know, ever.
Yeah, I need to check myself a little bit on it, honestly, which is like there are other cryptos that deserve my hate. And the one you're talking about, XRP, it doesn't deserve my hate.
Was I?
But I just like find an inkling to want to fight it, but I also don't want to turn people away who are like crypto curious. And we've talked about this before. We don't want to turn people away who are crypto curious because like one of the first coins everybody hears is XRP. And so I do need to check myself sometimes because like I do want to, I feel the want to like just like poke. It's like, it's not going to be the way you think. And I'm like, that's not like being an impartial educator. So I need to do a better job of that.
Well, I mean, I will double down and say there are plenty, and I actually don't like it. It strikes
again.
people
I don't hate crypto. Like none of us. I mean XRP. Like none of us hate XRP. It's just like it's talked about so much. That's it.
But XRP is a token that you're not allowed to have an objective opinion about. You have to either be a sycophant or a hater, and there's no in between. There's no ability to recognize that there could be a nuanced position on it. So it always just if you're not like bootlicking Brad Garlinghouse, it's just assumed that you hate it. But and the problem that I have with it specifically has almost nothing to do with the token itself. Almost like it's actually, I would call it and most people who invest in it victims of like a cabal of cultists that use it to bully people into holding things a lot longer than they should have. Like, can you imagine having the entrance to any cryptocurrency that you were buying at like a quarter or 30 cents, and then it went to $3 and whatever. And because of all the bullies on the internet telling you that you're a weak if you sell now, you didn't take any profit on it and just let it crash all the way back down to $1. Like, that's so sad. And the only reason I keep harping on it is because I just want someone who made the right bet with that horse to like be comfortable and not feel guilty like paying themselves, because it's never going to $1,000. But like if it went to 5, I hope to God that you would sell some. That's like my mission.
Yeah,
here.
yeah. I know we have a question in the audience, but just a quick capstone on it is like XRP is a great tool for educating people on like a lot of the problems that exist in the crypto space. And so I think it's still a good thing to, talk about as a result. But Evan, you captured a question in the audience, I believe.
I have several, and I'm just going to try and go through them real quick. On the way there, let me highlight this comment from a friend of the show, Sevish. Want a real rush regarding leverage trading? Push that slider to 100 or 150x. No, thank you.
Oh, I did a 251x trade with like $10 and was immediately liquidated.
Immediately.
Yeah, the liquidation point is like half a penny higher.
Butterfly fart.
And it's gone. Okay, that was fun.
Yeah, if you click the open position button on your mouse too forcefully, it accidentally will liquidate you on the other direction. It's insane.
Yeah.
We also have the suggestion from Magic. Has anyone tried Flash Trade? And I want to wrap that up with another question here from, I've already scrolled, damn you, TikTok, and lost it, from Melendra. Pardon me, Melendra. How can we short crypto? Websites like Pacifica, websites like Flash Trade, websites like Hyperliquid. And soon, friends of the show, Jito, launching JTX.trade. These are all perpetual dexes. A dex, DEX, write that down, is a decentralized exchange. You might be familiar with Uniswap, PancakeSwap, but there are many different dexes that offer many different kinds of swapping or trading services. All of them have slightly different secret sauces, and you need to learn how to use one called a Perpetuals DEX. Let us know, Melendra, specifically where you do stuff in crypto right now, where you buy your crypto, if you're trading crypto on chain, and if that's like already level 2 for you, let us know that too. We recommend you jump into the community.rumshq.com, because we've got people like Magic who are trying new platforms like Flash Trade, and we're always interested in learning too. So if you're trying to figure out how to short crypto, I recommend you go slow, but you can definitely do it. Can you guys confirm for me? I know Coinbase was supposed to get perps. I have turned it on. I have never used it.
Yeah.
Coinbase, Kraken, everybody. What are their perps? Are they like baby perps? It's got to be like.
I think you have to. There's some barrier to entry for perps on Kraken and Coinbase, I believe. But the thing is I'm just not using them myself. But there's some barrier to entry for Kraken. I went to go try to do it before, and I think you had to either have a certain amount on there, or you had to be like, oh no, I think you have to be an accredited investor to use their perp decks. There's something. I don't exactly remember. So if you're from Kraken and you're like, that's not true, I do apologize. But
fact check yourself, brother.
I have never used a centralized exchange for shorting and longing. In fact, I've never used a traditional financial platform for longing or shorting. I've only ever used decentralized exchanges.
What are some of the benefits, Will? Like, because I understand it, but like, I would prefer not to use a centralized exchange for.
Yeah, well, your fees are going to be larger. You know, I mean, that's it at the end of the day. You know, a lot of the times, like if you're doing scalp trading and you're using large percentage leverage or even just smaller leverage, but like, you know, if you want to protect your profit margins, you need to have cheaper fees. And so if you're looking for a quick scalp and you're like, cool, I just got a 8% quick little swing and I'm really happy with that. And it's just, let's just imagine maybe it's 10% or 12%, but then like the fee to enter and exit the trade brought you down to, you know, let's just say you had $100. Made 10%, like cool, $10 of profit, that's great. But then with the fees, it's like, cool, you made $4. And I'm like, oh, that really wasn't worth it at all. Or if you know, you get liquidated. So let's say you set a long, let's say, and price moves up and you're like, cool, I'm in profit. And then you set a stop loss because you should. It then triggers your stop loss. And let's just say you set it to be break even. You know, then your position is worse off because you paid larger fees. So like, your total position gets eaten out, it gets eaten, you know, a little bit more. There's a bigger chunk that's taken. So one thing you should do if you're setting long and short positions is you should set a stop loss so you only lose a certain amount. Or if your trade starts going in the right direction, move your stop loss with the trade. And if you move that stop loss to your break even point, you know, you just lose more on a centralized exchange.
Yep.
We also have the recommendation to try paper trading on a website called tradingview.com. There are many good tutorials that exist for this. Will uses it all the time for his technical analysis. Many friends in the community do. And Blowfin in the comments as a recommendation too. They have demo accounts you can use. I saw Melendra followed up to say she uses Robinhood and Coinbase to invest in crypto. And if you are using Robinhood, then you can short stocks directly via a feature called stock short selling if you have a margin account, if you meet their eligibility. And I think you, according to this site, this is Robinhood short selling doc, have at least $2,000 portfolio value. You'd go to a stock page, then trade, then short. On Coinbase, you can't short stocks, not in the normal brokerage flow, but they do have stock perps, this kind of trade we're talking about, for people who are not in the US and are soon launching their US regulated equity index perp style futures like a short ETF.
Yeah, and something to be aware of with a lot of these options, you will need to use a VPN because a lot of these decentralized exchanges do not allow US citizens to be able to use it. However, you can go to Jupiter. The URL for it is jup.ag, so jup.ag, and you can go use that without a VPN. You just have to have a wallet that works with Solana, so a Phantom wallet or a Soulflower wallet. Load up some funds and away you go. There are some reasons to not use Jupiter. Like Sivish, I saw you in the comment section on TikTok saying you like Jupiter. I like Jupiter as well. It's like really easy to use. It's a good, smooth interface. You don't need to use a VPN. But the issue with Jupiter, and this was brought up to me by the White Whale, and you know, he was talking about how he doesn't use Jupiter because in Jupiter, when you place a bet, let's just say a long or a short, if you win, those funds are coming from the Jupiter pool, not the order book. You're not playing against people, you're playing against Jupiter. And so as a result, if more people are in the obvious trade and that obvious trade is winning, then that's a lot of money coming out of Jupiter's hands. And so Jupiter can just turn it off.
Yeah,
right?
That's the biggest complaint with most of these platforms is they are much more centralized. Even the DEXs, even Hyperliquid is more centralized in many concerning ways than people would prefer. So there's a lot of competition. Sorry, Will.
And it's not even just like a general centralization. It's like specific, like you just said, Will, it's like a very specific thing with your book or your funding or which side you're incentivized to foster. I mean, and to your point, Evan, we saw that with Hyperliquid and the jelly meme coin when they were obviously losing and hemorrhaging because it went the wrong direction for them. So they literally rolled it back.
Yeah. And lately I've been using Pacifica because the white whale got me on it. And I was like, oh, this is fun. And they have custom P&L cards, which are just awesome. But the big reason why he made the shift, outside of a few other features that are really dope, but the main reason that I was just attracted to it from a philosophical standpoint was that it's not like Jupiter, where you're going against the Jupiter pool and they're incentivized to make sure that they don't pay out people. It's person versus person. It's based on the order book. So you're not taking money out of Pacifica, you're taking money from other people, which is how a long and short market honestly really should be, because that's the it's the most PvP type of trading you can possibly do. So there isn't an incentive to mess with things from like Pacifica.
Well, don't lie to the people. You're on Pacifica because of the custom graphics that you can make. For
I mentioned no. So I'm there for the philosophical reason.
Philosophically, you're there for the graphics.
I'm there because of the graphics.
Don't come for me.
Let me see if I can go find it again.
I was gonna say I need to see your graphic, and then Tori, where's
Speaking
Tori
of
at?
graphics,
can we get us a little
someone make this happen, please.
In podcast land, the
so
people
good.
want to know what you're talking about, so please tell them.
Podcast land, I have to apologize, and Emily did correct me in the comments here. Lindsay had this brilliant idea yesterday during trust issues for a new line of co-branded chips called Flamin' Hot Cheetos, and so naturally I had to get old Dolly to make me a render of what the bag could look like.
Good.
Dude, it killed it. I love all the like tiny little details on it. Nev fueled, community rewarded.
I love that I
Steak,
gave him
earn,
like
eat.
an Oculus headset.
Yeah, Chester Cheat is like blinged out for sure. On
Steak,
Solana
earn,
for
eat.
Solana.
Yeah, it messed up. I think this is like, I don't know, is this an eye on the outside of the glasses? I don't know exactly what's going on over here, but it's pretty close. And of course, down to the dust on the fingers and everything, but overall, killed it. And both Lucas and Justin seem into it, so I think it's only a matter of time.
You need to comment back on that Jet Europe account and let them know that that I want to go to Ireland for the Super Team Ireland thing, please.
Okay.
They are a Jito sponsor and support Super Teams Ireland Castle Have you guys seen the Castle Residency? I feel like I talked about it.
You have mentioned it and shown us a couple times.
I think we can get there.
I think
this guy.
Look at
this guy.
It's so gorgeous.
It is absolutely magnificent, dude.
I stand by what I said, though. I think that guy, it looks, you know who it really looks like to me? There's a guy in a meme, in a GIF, who's got a face who's like, and he's making that like kind of like, he looks kind of like Rami Malek, but it's not him. He's got a mustache. You know the GIF I'm talking about, the one where he's like, am I doing it right? I can't see myself in.
I'm not picking up what you're putting down, but
yeah, I'm not sure which one you're talking about. Evan, where are you trying to go with Jet Europa?
Absolutely nowhere.
He's trying to go to Ireland.
They have accelerated Jito in the past, and
I know, but you
say something like heard you guys are
I said, how do we get Evan to what?
Ireland?
The castle in Ireland this summer. And for your troubles, sir, don't spend it all in one place.
Put that in the bank for me for tonight.
Yes, this is a failed culture reference.
Is this a failed culture reference?
Thank you. The biggest news story. So perps trading aside, as we figure out the best UX in the perp trading game in anticipation of JTX. Let me just quickly put a cherry on it to say that if you missed our episode yesterday, we had Hayden from Jito on the show. We are organizing a workshop with some of the top traders and creators in and around the Perpetuals ecosystem. If it sounds like you should be invited to this early preview, send us a message, let us know, or if you know somebody who should be, let us know. The Jito team is going to open beta access to a handful of people to show them the trading engine beneath JTX's hood. And for everybody else, the real sauce is head to rumshq.com. You can get the link to sign up early at the exclusive tools and deals tab. It says JTX.trade, a Solana trading experience from Jito. They're coming for Hyperliquid. The perpetuals game is so wide open. It could be anybody's. And we're glad that our friends at Jito are taking a stab at this. We're excited to show people what it could look like. And we want you to tell us what you think. So check that out. The biggest news story of the day is, of course, Open Standards announcement about OUSD. And I want to kind of delay a little bit to get into it more with our guest. But what you need to know for now, and what we need to know to answer some of these questions, is a major competitor to Tether, Circle, RLUSD, DAI, whatever. The future of money on planet Earth is how I framed it in a video yesterday, has emerged. And Circle's stock reacted by what's the dip, Will? Was it 20%? I heard people saying 20, but I thought they might be 13.
I think it was 16% at the end of the day. Let me give it a
looky-loo, because the people in the comments want to know what we think about Circle as an investment prospect. Are we still bullish? What's the chart say?
14%.
So on and so forth.
15% is what it went down in the day. Yeah, so OpenUSD is going to be a competitive product, right? But there are competitive products out there today. So again, like stablecoin space is largely a duopoly between Tether and USDC. And of most transactions done in dollars, most of it, as of recent trends, has been USDC, but Tether is definitely more popular in Asia. Okay. And so we do have, what's that laugh about?
Grande 001 in the TikTok comments said, "None of you are successful traders. You're a bunch of talking heads." To which I said, "An astute observation, my friend."
Mm-hmm.
Hey, man.
And
hey, man.
Put some respect on Linda Popovich's son.
yeah, Linda's crushing it. But we all aim to be Linda one day. But yeah, so OpenUSD is a stablecoin that is being created by Open Standard, a new group, not necessarily a company, but a group or a partnership of 140 companies between finance, fintech, and technology companies, some of which include BlackRock, Coinbase, Solana, Visa, MasterCard, Stripe, a number of others. And this conglomerate has created the OpenUSD stablecoin, of which does a number of things. And now with William Quigley, who just hopped backstage, I'm like, oh, he's here. And if I say something wrong, I feel like I'll get torched.
Let's actually, before we get too into the weeds on this story, because this is one, I did not prep William for this, but if he's watched the news or if he hasn't, this will be a great way to break the story and get probably the most valuable reaction you could get to this. He is the most returning guest to Rise Up, a great friend of the show, co-founder of Tether, co-founder of Wax, aspiring DJ, and according to boards everywhere, the member most likely to reject your muffin. Please welcome Mr. William Quigley. William, thanks for making time to come back to Rise Up.
Hey, guys.
Good to see you.
Evan, you forgot the final note in his introduction, which is also the man that I will, mark my words, eventually give a muffin to.
Yeah. Did you get the muffin in the mail? We sent you one, hoping you would enjoy it on today's
I really
meeting
wanted to
we
Uber Eats you a muffin the next time you joined the show so that it would arrive while you were on the air.
I missed it.
No,
now there's just a muffin just like sitting in some mailbox collecting mold.
Yeah, we might have sent it to Michael Saylor by mistake.
Possible.
When we were in Miami, we had the chance to sit down with William, and that was one of the tidbits of insight we learned from his life is that, if you're gonna invite him to your board meeting, just skip the muffin. So, so the inside peek.
Yes.
How you been since then?
Well, now that we're in the crypto bull market, things are amazing. Quite happy.
Yeah. Are you rich yet? Lambo soon? Exactly. So
right.
just to bring you in on this story, are you hip to the news with OpenUSD and If not, will you permit us just to
Sure.
continue
I'm
this
not.
preview? Okay.
Please.
Oh, well
Okay.
then, Will,
Excellent.
continue
Yeah,
on. I'm going to
I'll-
bring up a screen share.
I'll continue from the beginning again. So OpenUSD, new stablecoin product that is trying to shake up the large duopoly between Tether and USDC. OpenUSD is a product created by Open Standard, which isn't necessarily a company, but is a partnership of 140 different companies, of which include the like of Coinbase, BlackRock, Solana, Visa, MasterCard, Stripe, a whole bunch of others, right? A lot of these big fintech companies, tech, finance companies.
140 partners.
140 partners. Now, OpenUSD kind of copies USDG's model coming from Paxos in the sense that it's revenue sharing, much more so than like a Circle, for example. So Circle splits the money that it makes from the bonds it's earning interest on that back its stablecoin between themselves, Coinbase, and their other partners. But largely, it's, you know, a lot of it is Coinbase and Circle. With OpenUSD, just like with USDG, it shares a lot of that yield to all of its partners. So like if you were a small DeFi solution, you could use OpenUSD and you can be earning some of that interest, right? So it's more revenue sharing. It's trying to incentivize people with financial gain to adopt OpenUSD and use it. And there are a couple other things as well that make this interesting to adopt, in the sense that there is no cap to however much of it you can mint at any time, and there is no fee for minting or redeeming it. This is different from USDC's model. So it's trying to reduce the barrier as much as it possibly can, and also spread out revenue-making opportunities to incentivize people to adopt it, okay? And a lot of people are saying this is gonna be very, very competitive because of those reasons, but mainly because of the association with a lot of those 140 companies, and Stripe has already said that OpenUSD will be its go-to stablecoin. So it's making a lot of headwinds today. Circle stock went down yesterday, 14% off of the news. Personally, if I'm Circle, I'm not too concerned by this, but also as an investor, I'm expecting the eventual landscape of stablecoins for there to be a lot of stablecoins, like a lot of them. And that's essentially currently the news. And William, that is kind of what OpenUSD is all about.
You mentioned real quick before we get William's reaction that this is making the duopoly maybe a little less relevant, but I just had to share this tweet from Paulo Ardoino, I believe, current CEO of Tether, who just absolutely brutalized Circle with this tweet that says, "Welcome OUSD, player 2 has entered the game." So disrespectful.
Spicy.
So, William, do you have questions about it? What do you think? I framed this to people as I honestly think this is one of the more significant pieces of crypto news we've had, not just in the last week, but in some time. And it is the fruition of what you've said on our show that Genius Act would do in one way or another, which is give all these companies the means to make their own money.
Yep. So let me take a different, the obvious benefit is you're not funding either Tether or Circle. If you're a company, an exchange, or like a Stripe, a payment processor, you are you're going to make probably more money off this, what we'll call like an open source created stablecoin. The parallel in the banking world is the automated clearinghouse network, the ACH, and for somewhat similar reasons. And for those of you, most people probably have heard of ACH. It's this way to transfer money. Instead of a wire fee of $50, you pay almost nothing. The last time I checked, it was many years ago, and it was about 0.7 of 1 cent to do a transaction. And the reason was the ACH is a nonprofit cooperative that 10,000 institutions fund, and it's funded to be break even, right? And everybody likes it, everybody uses it. There was some controversy. The only reason I ever got to know much about it was when I had funded PayPal. We had a hell of a time getting into the ACH network because the financial institution said, no, you're not just allowed to use it. But that was what Congress had said. Congress had said, this sounds kind of like a cartel that all you member banks are going to own. We'll let you own this cartel, but anyone who wants to become a member gets to partake. And ultimately, they let PayPal transfer money at whatever, less than a penny a transaction. So it's obvious why the industry would want to go that way, because you'd rather have this not-for-profit, basically, that doesn't, it's not extracting anything but operating costs. However, I'd say to you guys, there's a far more important reason than that incidental revenue, I think. And that is the companies that we've all worked with, like the big exchanges, even the wallets, a lot of them are bullies. And you do it their way or F off, right? And all the relentless, unending KYC bullshit that some brain dead compliance person keeps asking because they don't understand a transaction. So from my standpoint, the real value of this for all these member institutions that are going to use it is there's no more bully. They can do whatever they want. And it's going to be very hard to get all the member groups who are there's got to be some governance organization around this, but those guys are probably just going to, delve with what technology are we using, what software standard are we using, and that's it. So essentially, you can't be bullied by one or two big people in the industry. And to me, this is why, even if it was more expensive, you would find a lot of big companies saying, we want to use this way. We're sick of being told by Circle or by Tether, hey, you didn't provide us this corporate document. We're freezing your accounts or whatever it is. That's a bigger day-to-day issue because you're always worried, oh my God, if one of these guys shuts us off, we go out of business. And so I think that's the reason it will get among the senior leadership of these companies. They're going to say, we love the idea of not being bullied. I mean, imagine, guys, you're on YouTube. I assume there's some content creators on the show, and there's no annoying little YouTube person who just demonetizes you because they don't like what you said, right? Would we all like open source YouTube? Hell yeah. Even if we had to pay for it, we would like that better. From my standpoint, that's why this is attractive.
Okay, no, that's really, really interesting. I hadn't given it that angle before, but no, I agree with you on that. That's a big advantage. How about this then? Because of the financial structure, like OpenUSD will share its revenue. Circle gets to largely make its revenue, shares it with other partners like Coinbase, to a large extent. But like Circle will make a larger percentage of money from interest being made than OpenUSD. And then it's a centralized entity as opposed to a conglomerate of, or a co-op, if you will, of 140 companies. So it's going to have more funds that it will then use to be able to invest in certain things. Do you see that as an advantage for them to be able to take a larger portion of funds and continue to build up the platform in the direction they want, probably a little bit faster because it's centralized, and then be able to bring more to the market? Do you see that as being more advantageous, or does that still not necessarily negate the benefit of there not being a bully at all?
So it's kind of funny because what did Circle just do? Circle just started charging transaction fees. I want to say in the last few weeks, I only know because I started seeing a Slack channel called Circle Transaction Fees. And I'm like, what are those? Well, those are many thousands of dollars every single day. That's what those are. So why did they do that? They did that because how do you make money as a Circle? You grow your balance, you grow your AUM basically, right? on which you earn interest. Well, stablecoin AUM is directly related to growth in crypto. If crypto doesn't grow or if it goes down, then the stablecoin balances go down. And so when you're a public company, you don't want profits to go down, so you find other ways to nickel and dime. And that's what Circle did. So I think Circle will obviously make more money, and it will have a bigger budget. It'll have access to the capital markets, if you will. That's all true. But and so this is not like a company ending event just because you have this cooperative. It's another angle for people to use. If it'll happen, I suppose, that sometimes Circle will introduce capabilities that are very attractive. People will use them. Big companies will use them. And if the cooperative is 5 years behind, probably about right, in everything, then it's like, okay, for those few targeted things, we'll use Circle. And for every other thing, we'll use the co-op. I probably see it moving that way.
Yeah, the point about why these issuers make money, which, just for the record, this is exactly what Genius codified, and Clarity as the version that we see as most likely to pass right now, although we can't say that for sure. I guess theoretically something could change, does nothing to address that specifically. The concern that I would see about OUSD versus Circle specifically is just there's a lot more people involved in the creation and then allegedly the purchasing of backing assets for OUSD potentially, who are in a position to force more users and consumers to use this one in certain situations versus what Circle would be able to incentivize people to use USDC for. So if Circle with Coinbase and their joint venture can heavily incentivize the use of USDC on platform for a specific interest or something like that, look at all the companies that are on this list of backers and contributors to OUSD and think about how many other places beyond doing dollar things on Coinbase specifically that OUSD could force people to use that stablecoin instead of whatever version of the dollar they were going to use originally. It's like the ultimate, I mean, just look at some of these. We got like a gajillion banks. There's all these
Google,
big ass
Samsung,
companies,
IBM, a bunch of like traditional tech companies as well.
Visa, Stripe, MasterCard, American Express, and Discovery, all of whom would have to do with like who is checking out where. You don't even have to interact with OUSD specifically for them to create a rail behind the scenes with all those very specific infrastructure and payment companies to then use this one, meaning that all those assets that they're going to be buying to back up how big they could make OUSD in assets under management as a, an issuer, means they're going to earn a shitload of interest on like those treasuries, for example, thanks to Genius incentivizing them to hold those and not have to give any of that yield to anyone. This is exactly what we've been talking about with regards to the transfer of seniorage specifically from the Fed and the US government, which would be, the way that they, without any funding, make money on the margin between creating the dollar and then selling the dollar. It gives that to all these gigantic companies, many of which are not even in the United States. They're not even American companies. So to me, that's the big like concerning point of this whole thing. It's just like, this seems to be like the rapid realization of how aggressively you can shift the benefits of seniorage from the Fed and the Treasury away into private companies.
Mm-hmm. Though, I mean, that's not a huge amount of money for the Fed. No.
Yeah.
It's nice because it's free, 100% margin.
Right.
But, it's, it won't change that much. It's not a reason for the U.S. government to say, oh my God, this is going to upset the primacy of the dollar. The fact of the matter is, though, that like we are going to have thousands of stable coins. Now, most of those will be like forced upon you in some way. JP Morgan wants you to use its stable coin and you're a customer of JP Morgan, you're going to use it, or Facebook. And my guess is most customers, they won't care that much what at the retail level. There's no branding of stablecoins, right? It's just there's capabilities people want, but the underlying token you're moving back and forth, I don't think anybody cares about. As I often remind people, probably the least understood part of capitalism globally among people who run the capitalistic entities is how money moves. It's quite rare when I find a CFO who understands the payment systems. I spent 30 years on this. It's so complicated, and there are so many different parties taking a little piece of every transaction, and that's only in the U.S. Forget about cross-border and international. So I think for the most part, if anybody decides they care, maybe it'll be because some of these companies are offered some return, like the way Coinbase gets something for pushing Circle. Maybe Google gets something for using OUSD. But like I said, I think at a high level, it won't. This doesn't mean other privately issued stablecoin companies like Circle or Tether go away. There's just an alternative that is attractive to a lot of people. And of course, the privately issued stablecoin companies will have to do something more. I think the lowest level response, it's like when I measure entrepreneurs, the lowest quality entrepreneur says, I'm going to offer the same thing you are, but I'm going to do it at a lower price. Like they always price compete. That's the first thought of most entrepreneurs. And the reality is, unless you're giving the thing away, you're not going to be able to price it so low that you're going to negate all the benefits of whatever product it is that's getting bought, people want that product for. And so there's so many ways you can innovate with stablecoins and offer things with stablecoins. So probably it'll push some more work on behalf of both Tether and Circle to do things that maybe their customers have been asking them to do, and they've just been like, you don't have a choice. Who cares? You know?
Well, that's why I think somebody like Coinbase, who's part of the coalition backing this, is a big winner, because whether people use Circle or people use OpenUSD, Coinbase is going to be happy about it. And that was their remark, is they said, we're just interested in bringing the best stablecoin product to our customers. I am still concerned, though, in the sense that, like you said, there are going to be a bunch of stablecoins. What worries me is we wanted payments, the other benefits that crypto brings to money, to rise to the front. We didn't want consumers to have to think about Tether or Circle or whatever, or blockchain. We wanted better, faster, cheaper payments. Like you said about YouTube, we all get to own the network. And what I feel like happened here, or at least we've moved in this direction, is now you've got 140 of the highest distribution companies in the world who have some of the best on and off ramps for money, and who were either in the money changing elite, the banks, the issuers, the payments processors, or they were like aspirants. I would consider Coinbase an aspirant to be in the elite, who have kind of said, government money is great. We love the dollar. It's the world's money. But wouldn't it be better, kind of like Alex said, if instead of having to rely on using the dollar all these ways, relying on private companies, like you said, that we're one company, why don't we just bootstrap ourselves into the next era of what money could be in the world? I just feel like it's a huge lever to pull, and to be able to pull, that, I don't know, at least theoretically, nothing has happened yet, moves us farther from this world where we all own the network, we all participate. The language of this thing, they talk about it's an open network, it's a shared value network. I don't know. I I don't see MasterCard giving you and me, maybe you, a seat at the table. You know what I mean? They just want us to use their product and take the fees that they can squeeze from us.
Well,
So do you think this might make something decentralized more competitive, guys? Like Ethereum? Certainly volume for OUSD will live on the Ethereum network.
Well, that's the part that's going to be the most interesting in the first, 6 months to a year of this thing existing, just because, you've already seen all of the posts, or a lot of them, about the different networks that are getting this thing on day one.
Like
Solana's
Tempo,
getting it on
big
day
time.
one. Base, day
Stellar.
one. Tempo, Stellar.
Probably Ripple.
Plasma has
This will be at
posted
the
about
end
it.
of 2026, by the way. Near the end of 2026, you'll start seeing OUSD pop up.
Yeah, and for the people asking, how do I invest in it? We'll talk about investability and how to play it in a second, but please continue.
Well, to be fair, just take a look at that giant list of companies that are helping build this thing, and I'm sure there's a fund of stocks, because a ton of those companies are publicly traded. So you would be able to theoretically invest in the issuer, who will make more money from this thing existing, would be one way that you could look at it, without like doing it specifically.
Yeah, although I would say, money movement is highly efficient. Don't go off running around trying to invest in companies that are participating in this thing because they're going to make slightly more money. I don't know. I would probably say that's not so relevant. As an entrepreneur, now I'm going to say I doubt what I'm about to say, but if it were the case that and it's the opposite, but if it were the case that anybody, because you see all these companies here, they have to be very, very careful about not pissing off the Department of Justice to come after them for price fixing and unfair business practices. When industry coalitions form and they're like, we're just doing this thing for the benefit of consumers. No, you're not. You're doing something that's better for you and probably worse for consumers. That anyway is the view of the DOJ, right? So one of the things, if you're going to say we have all these huge companies participating in this, then it has to be very public and well enforced who gets to join. You can't gatekeep this, you can't say, oh yeah, only you but not you, because then it's like, now it's starting to seem like a predatory thing where you're going to use this to kind of push out the smaller companies that would have been able to use this but can't, just because you're trying to eliminate them. So the benefit of this would be if it became much easier to move money, because OUSD membership rules are pretty open and fair and transparent. And all right, I'm going to start a company, I have a new blockchain, whatever, I get to join. I'd be looking very closely at that. I suspect there will be lawsuits regardless, but there will definitely be lawsuits if they're gatekeeping the shit out of this. And if they don't, it would be good for lots of smaller businesses, because you can't just say to Circle, hey, we want to be your partner. Circle buries you with thousands of pages of documents and endless KYC and all kinds of other nonsense, right? Who's going to be doing that work at OUSD? I don't know. But someone's going to have to. There's going to have to be somebody there saying you get to join and you don't. And they should be very, very visible about what those rules are. Because obviously there's a lot of companies out there. There's millions of companies. And what did you say? There's 140 who have said we're part of it?
Yep.
Mm-hmm.
Yeah. So, all right. Why you 140 and not 140,000? Who made that rule?
Yeah.
I would imagine that more will join that collective. And just for a quick second, I wanted to bask in the optimism of your assumption, William, that the Department of Justice is still interested in pursuing companies guilty of fraudulent and predatory business practices, because by my observation, we've completely left that that enforcement standard behind.
You know what they do when they see there's a pocket of money that they can grab? That's when they grifters.
Correct.
Yeah.
Yes.
They do that when they see, oh, look at this. Also, the U.S. has a very solid system of private action lawsuits. So we're going to learn all about this. Presumably, it's a 501c6 like the ACH, and that there's a lot of rules for that stuff. We'll be able to see the tax returns of it, see exactly how much money it's making now. But this is a good thing in many ways if it goes the right direction. Generally speaking, the more competition you have, the better the pricing and the more services we get access to. Circle couldn't expect to be like in this duopoly forever. Now it's thinking about it more, it does come at a time that's a little surprising. Historically, people kind of ignore crypto when it's in the dumps and there's not a lot going on. But as soon as it starts rising again, you get a lot more people saying, "Oh, let me go and build something here. This market looks sexy." So we're in a pretty bad bear market, and for something like this to come out in a bear market is a little bit surprising. And it does give people like Circle or even Tether less room to maneuver, because it's not like you can absorb a lot of hits when you're already way down.
Yeah, I would say though, from a timing standpoint, I think it might make a little bit of sense because you need some time to get up and operational and increase your liquidity levels. And as a stablecoin, that's a huge factor. So if they want to be positioned for a bull market run, they kind of need to start getting the wheels turning a little bit, get liquidity out there, become available on a number of platforms if they really want to, hit maximum profit. My personal thought.
Yeah, I mean, that is true. It is, on the one hand, hard to get people excited when things are down, but it's easier to roll things out when you're not in a chaotic bull market. So yeah, and these companies, I'm going to speculate, the majority of them don't care about crypto prices up or down. This is more about mainstreaming stablecoins. And by the way, it really tells you how misunderstood the plumbing of payments is by the fact that stablecoins have been the optimal way for more than 10 years, the obvious optimal way to move money, particularly cross-border. And yet, it's only now in, the later 2020s where companies are like, we should really think about this. It never really resonated with them because there's no one except for a few treasury weirdos within companies who really understand this stuff. But once you start to see the flexibility of being able to move money like you can in a true stablecoin, we'll see if it is on Ethereum, if it is, all transactions are visible. We'll see. I have my doubts, but if that is the case, we'll see how well people are going, oh, wow, this is a way easier way to move money. Yeah. It would be nice, by the way, and we should see it. I guess we can assume right now that OUSD does not have a PR firm. I'm going to guess.
I would guess.
Yeah.
Not
that I've seen.
So keep in mind, it's the UN, right? Think about it that way. Yeah. What can the UN say in any given day that 190 member nations say, we agree with that? Nothing. Absolutely nothing, right?
Mm-hmm.
Yeah.
They can say stuff like, we're having a session at this time. Here's our schedule, right? That's it.
We could argue that too.
So OUSD could greatly benefit, especially in holding off a DOJ investigation, if it had a marketing firm, right? If it had a spokesperson who said, my people, you are all going to be better off because of this gift we're giving to humanity, right? That would be great. But you can imagine you've got Coinbase, you've got Google, you've got whoever, Amazon, whoever else is part of this. And they're like, one of them's like, oh, I've got a great PR person to kind of push the crypto angle. And Google's like, we don't care about that. We care a lot more about whatever payments to advertisers. We want that to be the message. And this is why cooperatives, they're good with some basic plumbing. It's like utility wires being laid. But when it comes to branding, positioning, they're impossible. Right.
Yeah.
And that's why you need these private companies who really market and position to do things that people care about, because the cooperative is just an invisible infrastructure layer. You know?
Well, the other thing I don't like about cooperatives either, and I didn't know ACH came out of that. So that's like the one example where I'm like, hey, something like good came out of this that's actually useful and adopted. But it's just that with a co-op, it's almost impossible to get any coordinated direction targeted. Absolutely. Right. And so if you're looking to expand offering features, capabilities, and all that, like it becomes impossible because 140 companies are barely going to agree on anything. They're all going to have different incentives, kind of wanting to pull this thing in a different direction. So I feel like when OpenUSD comes out, it'll find its slot for what it's going to be used for. And then it's really just going to kind of remain there because it's not going to change too much as a result. It's not going to get new features or capabilities. Right. And if it does, it's going to be very, very surprising.
And think about it this way. If OpenUSD is the Fed, right? Does anybody at the Fed like brag about FedWire and the cool way it moves money around? No. If you've ever heard these Fed people, they couldn't sell, water to people in the desert. So if USD is FedWire, then all the private companies can be Venmo, TransferWise, whatever, your various payment things that, Amazon Pay, Google Pay, Alibaba Pay. Everyone kind of Stripe for apps. Everyone can sort of like add their little special layer of differentiation. Of course, part of this will come down to what you're allowed and not allowed to do. And, do you have to even, and this is all the stuff that will get hashed out during these awful meetings that the cooperative member people are going to have to decide on.
With their little muffins.
Yeah, with their muffins. Do we have to indicate we're using OUSD? Can I mask it completely as a white label? Do I have to say brought to you by all that stuff's going to come about. The parallel here, another parallel, maybe in some ways more than ACH, would be another arcane area, but we all are influenced by it, which is the IEEE standard, International Electronic Engineers, thing, which designates technology standards, MPEG-3, MPEG-4, Bluetooth, Wi-Fi. So those are all branded technologies that are owned by the IEEE association that is made up of members who did what? The members contributed intellectual property. And I, it took forever for us to get Bluetooth. And Bluetooth was a typical IEEE cooperative would be like 50 or so companies coming together, contributing their IP and saying, we're doing this to create a standard like Wi-Fi. Bluetooth, I think, was 1,200. Think about that. 1,200 technology companies came together and they said, I'm going to contribute my little patent and technology, but I want Bluetooth to do the following for their customer base and so on. And initially, the Bluetooth chips were supposed to be a nickel, 1/20th of a dollar per chip. And I vaguely remember when they first came out, they were like $10 a chip.
Oh my God.
And it was because there was so much shit that had to be piled in to get everybody to agree. And eventually the standard got working. But I don't know about you guys, but do you see Bluetooth innovating rapidly with all kinds of new capabilities? Of course not. once that thing got approved, there's a governing body that mandates it, right? And by the way, when you use a Bluetooth chip as a manufacturer, you pay a royalty to that cooperative, and then the cooperative doles out that money based on how many patents you submitted. But these days, if you were thinking of innovating around Bluetooth, you probably as an entrepreneur wouldn't, because you'd be like, whatever I do, I'm just going to have to send it to that IEEE group, and then I'm going to get a little sliver of IP after 20 years because somebody finally approved it. Innovation freezes around these cooperatives.
Yeah, it's homogenizing.
This is such an interesting, I feel like you could talk about just this for hours, because I think there's several examples of like really interesting things happening in and around co-ops, like especially if you zoom out a little bit and you look at like Ace Hardware is a co-op. How many thousands of Ace Hardwares are there that have singularly aligned on a very specific mission with a bunch of independent owners that kind of are all...
Spray also is a co-op. Like you have a lot of farmer co-ops.
No, there's tons.
Right. Farmers, that's true.
Another interesting one that's not really like in the same spirit, I guess, would be like you mentioned, William, with the IEEE standards, which I just looked it up because I wasn't sure how many there are. There's like 2,400 standards that they that are underneath that umbrella.
Electrical standards, battery standards, they're huge.
There's your zip drive, right? Compression. And for the audience, why, just so you guys know, why do we want a standard? Okay, if every company creates technology that doesn't interoperate with anything else, then it's like the Tower of Babel, nothing communicating with anything else, and it's a nightmare, right? And the most famous kind of example of this back in the old day was the closed Apple network. Things run really well when you create everything in the stack because you know what the software is, so you make it super easy. Microsoft went the opposite way. It said, we're going to publish like how this stuff works. You pay us a little and you all can use Windows. Nothing works well on Windows, but everything works on Windows. And with Apple,
that's the perfect description of Windows,
right? You're always like, why isn't this working? And we updated, they didn't update, whatever. And Apple is super smooth, but it's closed. And of course, Apple has gradually opened its network, but it's done so usually through litigation. Let's be fair. And
always
like
through litigation,
right? Like, why did they have their stupid lightning interconnects when freaking USB-C is there? And the EU finally sued them and said, go to USB-C, guys.
Yeah.
By the way, the reason Apple did that is because they made, last time I checked, around $40 billion on peripherals. That's why, right? They love to change the standard slightly, so we have to buy a new bunch of connectors. As we can see just by spitballing this thing at the very basic level, you can see, the cooperative is cool, but Wall Street loves to be like, oh my God, it's the end of everything, right? Wall Street either thinks it's binary. It's either this news is great for the stock, it's going to the moon. Oh, this news is going to kill the stock. It's never that, you know?
I wonder,
like Circle will come out at some point and say, I bet you they position it like this way. We welcome innovation in our industry. OUSD will be a welcome and we will make sure we interoperate with it, blah, blah, blah. And presumably they'll also join it. I mean, why wouldn't they? Seems like they should, as should Tether. It's going to, like everything else, it's going to come down to, are your needs being served? And don't underestimate what I said at the beginning. It is so annoying if you're in the cash movement side of the business, any business, dealing with bank KYC, dealing with just endless compliance related questions that go nowhere. You get your accounts restricted for no reason. I mean, there's no company out there who would want it to remain that way. Most companies are like, yeah, I'd love to do what you want to do. Frankly, this was what was so wonderful in the early days of crypto, right? It was amazing. You could just build anything And it was a one standard. If you built it on that chain, everything on that chain interoperated, and it was nice. That was the goal of Ethereum. Somehow it lost its way a bit.
Yeah. I wonder. I think the ACH thing
now,
is.
hang on, Alex. Let me stop you because I know, Will, you've got to go in a second. Yeah. So I wanted to give you a chance to get a final thought and just remind the audience that our show will wind down in a couple of minutes. It's almost that time. We got to ride our dogs and ponies into the sunset. So if you have a question for our guest, William Quigley, about OpenUSD or something else, let us know. Will, your final thought, my friend?
Yeah, a couple things. One, Jeremy Allaire, who's the CEO of Circle, released a very lengthy statement on this. It was released this morning or was late last night. You can go to his Twitter. He's posted it there. You can see its statement. And it's not like we welcome innovation. It's more like, hey, this is why I think people will still choose USDC. It's very, very lengthy. And I would say of all the things that he mentioned, one is there's a very vague statement you'll see first about network effects. And honestly, he says that. And I read that first bit and I was like, I don't really get a lot of meat out of those potatoes, but you know, and maybe you know, I don't get a lot of. That's not a saying, but you know what I mean.
It should be. It's a new saying.
Yeah, I don't get a lot of meat out of those potatoes. You say it with confidence. Anything sounds like a saying. Yeah. But see, hey, William Quigley likes it, so clip it. Yeah, so William, I'd be curious to get your take on that piece. But the only other thing he mentioned in this that we didn't also bring up, like co-op versus a centralized company, is the fact that Circle's been around for the past 10 years, building liquidity, but also like building compliance with regulations and also relationships and networks across the entire globe who want to use it. So I'd be curious to get your take there as well. And then the other thing that I'd like William to get your thoughts on, and I'll come back and watch the recording on this, is Circle's building their own blockchain called Arc. And I'm curious to get your take because I've seen that and I'm like, okay, that's interesting. But I haven't really done too much deep diving in terms of like what that could really mean from like a product offering standpoint, who would use this, what it's for, all that kind of stuff. So I'd like to be curious to get your thoughts on that. Unfortunately,
by the way, that's a perfect example of what we've been talking about. Guys, are there one or two blockchains out there? I think we can name a couple that exist in the world. Why the F would Circle need to build its own blockchain? I'll tell you why. Because it can't get certain capabilities. It can't convince the developers or the community of those blockchains to build what it wants in the time frame it wants. And it's like, fine, we'll just do it ourselves. And so this is a perfect example of like, you're always going to have proliferation of technologies because for the most part, when a thing gets built, the innovation stops. Now, I don't mean literally, but almost all the big hoopla of a new thing, it stops. If for no other reason than the developers are like, that was cool, what's next?
Yeah. Okay. For me, I gotta run. I'll see the rest of the conversation later.
We'll catch you on After Dark.
Yeah. I'll see you guys later.
Okay.
The ARC thing to me just felt like a not a response in that they only did it because of, but just like the same thing with Polymarket. Wanting to make their own, or Pump Fund moving away from Radium receiving the tokens after they bond and launching their own DEX to take all of that. It's just like, okay, yeah, sure, this works just fine. And I could go multi-chain, but I could also just like own all the plumbing myself and capture more of the revenue. That's all, I guess, the only thing I thought of when I saw the whole ARC from Circle.
If you're building a lot of stuff, I've built a lot of stuff. The draw to do it all yourself so that you can call that engineering team and say, add this capability tomorrow. It's so compelling versus I need to interoperate with these 50 other guys and, I'm on their schedule. It's really annoying. Even, by the way, even in IT. So when I was at the Walt Disney Company, this is like the 80s, early 90s, and we were rolling out the Disney Store back in the day, we were using the Disney theme park inventory management system. And I still remember needing something for my finance team, and we communicated with the Disney theme park IT group. And I said, hey, could you make the report like print on both sides? It was kind of that type of thing. And they're like, okay, blah, blah, blah. And I'm like, So when do you think that could happen? And they looked at it was about 2 years. So yeah, you'll get it, whatever, blah, 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 2 years from now. And so I went to the CEO and I was like, this is where we are. And he's like, yeah, I've heard enough. We're going to build our own tech stack, right? And that's even within a larger company, right? They build their own thing because they're not going to wait for the guy in the other division to give them what they need. So all of these things are reasons why cooperatives have a utility, but it gets very frustrating very fast, right?
Yeah. I feel like the ACH thing is actually a better example of this specifically, but in a different capacity, because with ACH, don't you, and correct me if I'm wrong, aren't there like 2 primary companies that make that up that are directly competing with each other, right? Between Fed whatever and is it EPN, oh my God, the electronic payments network, which is like owned and contributed to by Clearinghouse and a handful of other, I mean, there's a gajillion like banks and credit unions and whatever that participate in that whole consortium. And they're basically agreeing that like, hey, this rail system, this piece of infrastructure is good for both of us. And then they compete on top of it. And it feels like this could be an instance where, yes, there's 140 or, whatever, and however many more could sign on eventually, but that would agree like, hey, the rail here is the interesting piece that will, take all of our different business ventures to the next level. It's in our best interest to foster this particular piece of infrastructure while we're still all competing on the surface in a handful of different ways, because not every company on that list of 140 does the same thing, or even like particularly close to the same thing. Obviously, there's lots of crossover and then there's competition, whatever. But I can't help but think that, like, to Will's point about, global recognition and already being regulated. And sorry, not Will's point, what Jeremy Allaire just posted in that whole gobbledygook. I feel like that can't matter at all, because all of those companies are, one, all over the world. There were companies mentioned from at least a dozen countries that I could see just in that quick glance. And all of them fall under the purview or the jurisdiction of some regulatory body and some enforcement agency already. So I feel like that point is just cope on his part, staring down the barrel of, more serious competition for the first time in a minute. I don't know.
There's a lot of cope. I think there's a lot of cope.
Yeah.
There's
a lot of
job.
cope. Yeah.
They posted a Forbes advertisement today. I think they're in the Wall Street Journal today.
Yeah.
All their employees are retweeting and writing about why this is not such a big deal for their business. So,
the memo went out for sure. Yeah, absolutely.
We're going to see. It'll take a while, figure out where all the dust settles, who uses what. Again, what normally happens to cooperatives, to cartels, they break down. Usually. That's why ACH is sort of like a surprise. It just shows that, hey, we all don't need to rebuild the exact same payment infrastructure. Let's just have one layer. But like I said, there's not a lot of innovation that's come out of that. No bank is like, oh, I'm going to invest in the ACH network so that all the other banks can benefit. That we just don't do it like that. So also, I would just say, the easy money and stable coins is kind of past, right? I mean, like literally the stable coin itself, which only required one thing, a bank. If you had a bank, you could make it. And getting a bank was virtually impossible. So with that gate now open for others, there should clearly be more competition, which means you'll get more innovation, hopefully. And then you've got all the other countries of the world. At some point, remember, a lot of transactions go cross-border. Like, you're going to need to see international companies saying, we like that too. I don't know how many of that 140 were like European-based.
Mercado Pago is probably the biggest name that comes to mind in terms of like global payment people.
Yeah, I don't know where they're based. Is that Europe?
Mercado Pago is used by a lot of the LATAM people.
Okay. I got it. Okay,
I also think Europe too. But they're huge.
Yeah.
Yeah. So it's a big deal.
Oh,
we
it's
can
based
definitely say that.
in Buenos Aires.
Yeah.
Actually.
Okay.
But there's some European banks. There's some, I feel like maybe I didn't see a lot of but Samsung's in there, so it's like, it's mostly Western, but it's, it looks more like the Mag 7 or the S&P 500 than it looks like the globe, if that makes sense.
Right. So if we were stock analysts, here's what we should do. I haven't seen this in a long time. Somebody take like a schematic of the global payment network, right? And then this is where you would need a McKinsey to identify the margin capture at each layer of that stack and see where most of that money is aggregating. And I would exclude FX entirely, but just on the transaction side, clearly some of the major guys like, the Allipays, Amex, MasterCard, those kinds of guys, American Express, and then see, are you a winner? Or are you a loser with this sort of thing? Somebody's going to lose for sure, unless we think that the creation of OUSD is going to lower overall fees across all networks, in which case, all right, probably some people are maybe losing more than others. But I bet you no one is saying that right now. I'd be curious what Wall Street thinks. They probably will take a lot of time to digest it because it is so complicated. But there really should be a net efficiency that somebody definitely loses and maybe somebody wins. I think if you're a giant company, an Amazon, a Samsung, a Google, Apple, those guys should benefit greatly from a payment company network losing individual power. Kind of like the decentralization of payments should really help those companies because, if they can use this networked money and stop paying all these big companies they pay now, that would be a big bonus.
I feel like, so there's like 4 groups of companies in this. There's the Visas, the Stripes, the MasterCards, the people who are like facilitating the processing of payment and at a point of sale level. Then there's like the BlackRocks, the BNYs, the Bank of Australia's, like the money holders. Then there's Google, Samsung, IBM, Shopify, who are like software as a service. Mercado Pago's in this bucket. They're like kind of facilitating distribution to point of sale payment. You know what I mean? And then there's crypto companies. So in my mind, the Visa, Stripe, MasterCards are gaining like a leg up on the crypto native competitors, Tether and Circle, that are eating their lunch.
Yes.
The BlackRocks, et cetera, are just, they're throwing money at this thing to invest in it and make some money back to help them scale and grow, probably bootstrap liquidity, I would imagine. Google, Samsung, et cetera, are saying, we could build our own stablecoin, but like you guys take care of it for us, is kind of how I feel like that's going. And then Coinbase, Tempo, Bybit, Solana, Base are like, please, let me move to the adult table this year. And this is their ticket, is what it seems like to me. So they're all giving something up, definitely, but some of them are, Coinbase, I feel like, is the biggest winner from this because they've already got the Circle money. You know what I mean?
Hands firmly in both cookie jars.
Or like, BlackRock is obviously a big winner in this. Stripe is a big winner in this because their blockchain Tempo will definitely be like a hotspot for liquidity for this token.
You know who another big winner of this probably is in that same vein would be Plasma. Because they're kind of swinging in like without a tremendous amount of noise, but this is like their whole value prop specifically. And I know they're on the list of chains that are getting this on day one.
Yeah.
So, I mean,
Ripple is on this list, and you just know that behind the closed doors, all the Ripple people are like, thank God, like finally, a stablecoin people are going to use, you know what I mean? It's what they've been waiting for this whole time.
Started.
No, feel free.
Please. Come on.
Well, but also here's a really good indication of why, companies like this, because they're going to be able to make a little bit more money than they would with Tether or with Circle. Well, who was making the most money with Circle? That was Coinbase. But Coinbase is a marquee customer of this. So clearly from Coinbase's standpoint, they're like, we like this route, even though it directly will reduce the profit participation they get from Circle. So what do they get? They get the flexibility I'm talking about, because I'm sure even they get annoyed working with Circle. You know, you're just, it's just constant paperwork back and forth. And the idea that now the cooperative doesn't have a lot of power is super compelling to people. This is, by the way, why everyone wants to be a member of the Fedwire network, like what Kraken got, because instead of dealing with these god-awful compliance people at these loser banks, now it's the federal government, and the federal government is asking very few questions about that kind of bullshit. You know, they, of course, if there's something very weird, they'll ask, but they don't weaponize compliance. And so I could see people being very attracted to that. Clearly Circle or Coinbase was, they were probably kind of felt like they were equal partners with Circle and them. And now, they're like, hey, if you don't want to do this, Circle, we'll go the OUSD route.
Yeah, what a great negotiating chip. That's my big takeaway, and my big problem with all of this is I really believe that people will shape the future in the direction of the best incentives. I think it is unfortunate that a lot of people with a lot of power, we do live in a capitalist system. Capital is the biggest lever. These are the people with the most access to capital in one way or another have created a tool for themselves to get more. And I could see the IEEE or UNification of crypto money happening from something like this. Like, this is kind of I don't know. It's all the powerful companies, the would-be powerful companies. It's a boring kind of thing, processing payments, giving people access to moving money. But people will, because this works for them and gives them, something they can do everywhere that's the same. They're not going to innovate. They're going to accept it.
Right. And you're very right about this. When companies, it's like a muscle. When you start to work on a thing, the next thing you work on like that becomes easier, because now you have this cooperative framework and you can introduce other things you might want to compete around or develop around. And so it's, again, kind of like the UN. So, I actually think the people who would benefit the most, and this is why the worst decision of Mark Zuckerberg's career was related to this, is the companies who will benefit most from a stablecoin are not the major banks. It is consumer technology companies that have hundreds of millions of customers. So that's Samsung, Amazon, Google, Apple. Those companies can literally have, and Meta can have, a closed world where you've got lots of commerce that goes on on Facebook, right? The marketplace. You now can, and it's global. So if this was what do they call it? Libra, whatever it was.
Libra,
this was their
DM,
idea. Yeah, that was going to be such a screaming hit.
And that was a consortium too. Shopify was in on that, I think.
Yes.
Some others.
2.5 billion people who could now use this global currency and avoid the awful FX fees. And the problem was that Mark Zuckerberg had no idea what it was. And when he went to Congress, and Congress is like, what are you doing? You're threatening the dollar. We all know here, this isn't a threat to a dollar. This was a benefit to the dollar. It was making the dollar more ubiquitous. But he sat there during the hearing in Congress, and he basically folded, right? He said, okay. He had his little talking points. I knew he didn't know anything about this thing, and because he was too focused on building the metaverse. And this would have been his most profitable venture after maybe acquiring Instagram. And instead, he focused on a turd, metaverse, and not becoming the first global company that had a stablecoin. And there's no law against a stablecoin, even though, as part of Tether, I can tell you a lot of people tried to shut it down, but there was no law against it. And so he could have just said, look, unless you can show me that there's a law against this, I'm going to do it. And so those companies, so he's going to have to do it. He must now see the value of stablecoins. So those are the guys. So Google's the big winner. Apple's a winner. Amazon, Samsung, those guys are going to benefit most. I assume they're all part of this. I haven't looked, but I assume they all are.
I don't know about Amazon. Google is. I don't know.
Amazon will be.
Yeah,
I mean, it just would be dumb for them not to.
I could see Jeff Bezos seems like the kind of guy who would read this press release and be like, and then try to make his own. Like that's how I felt about Blue Origin. I felt like he was watching Elon's rockets and not saying anything, but just getting a little jealous while he sipped his coffee and was like, you know what I'm going to spend my money on today? A bigger rocket. I don't know. He just seems like that kind
I mean,
of guy.
that has been the way he's gone, right? He built
Yeah.
his own stack of technology, AWS. He fired UPS and has his own delivery network. He has his own plane network.
Yep.
That's true. Money is a bit different, right? It's.
I agree. I don't know if he knows that. He seems like he has enough hubris to try big ideas and learn by finding out. You know?
Yeah, I think one of the most important things a CEO does and a board is they figure out on what dimensions do we want to compete in this market, and that's what they drill down on. I would think like money movement efficiencies, that wouldn't be an area I would want to compete on because it's there's a lot of like global solutions. And it's also kind of buried in the bowels of commerce. Nobody sees it. It would be like trying to compete on lowering the VAT if you're in Europe. It's just probably not an area that you're going to get a lot of bang for the buck. So Amazon likely will, I would suggest, they'd probably say, yeah, we should just be part of this. And of course, because it's a cooperative, no company is barred from building its own network, right? You can still build your own network. You just use this. The real harm this could cause is if AUM starts increasing in OUSD, not in Tether or Circle, right? That's the real threat. Because the way these companies make money up until a month ago when Circle started charging transaction fees, the way they make money is just interest on the AUM. And I haven't looked yet. Now I'm going to. Where do those balances sit?
Well, in terms of Tether today, I think they're undergoing their most extensive audit ever, and that has been the subject of consternation that people have, in my experience, with Tether, the company. And I think USDC has used that as their selling point. Is like, here's our, like right here, look at it. Here's what we're holding.
It's like. When I was in college, we, Notre Dame and University of Miami, it was Catholics versus convicts, right? And there were a lot of convicts working or playing for Miami, and I've always said with Tether and Circle, it's Catholics versus convicts kind of thing, right? It's like what Circle lacks in capability and profit. It's like, yeah, but at least we're like. Not convicts.
Good little boys, yeah.
Yeah.
That's hilarious. Catholics versus convicts. William, I don't know if this is something you talk about. Feel free to shut it down and tell me no, but I don't think we've actually ever asked you, what was your transition like from being like in the room, figuring out, it'd be cool, stablecoins, and let's, nurture this product, and then being like, no, I'm out. Was it a contentious decision? Did you exit?
It's really simple, guys, and it still fucking annoys me. No, it was government abuse. Abuse. That the people who stayed at Tether don't hold U.S. passports.
I know. I noticed that.
Everyone with the U.S. passport left because we didn't want to be imprisoned. You were like, well, why would you go to prison if you didn't commit any crimes? Oh, yeah, motherfucker, why? But do you know what? The U.S. government, DOJ, the financial regulators, the investigating is the punishment. All right? They have a right accorded by the U.S. Congress to investigate. And that is a abusive practice. By the way, back in the 70s, before Richard Nixon got resigned because of Watergate. I think about that now. Like, that was such a trivial thing now that wouldn't even make the fucking news, right? But back in the day, Richard Nixon made kind of an off-colored comment, and it was kind of more just like an annoying little joke. But he said, like, oh, if this guy keeps doing that, I'm going to have the IRS investigate him. And the shock that presented to America was so severe that Congress got together in a bipartisan manner right after and basically said, anyone who tries to do that goes to prison, no matter who you are. And it said the IRS records can never be revealed unless a federal court orders it. By the way, who broke that? The Democrats, right? Under the Obama administration, a person working for the IRS was leaking a bunch of tax returns. And in fact, now I think about that, also happened, right, with Trump. Guy just got sentenced to like 5 years in prison for leaking a tax return. It's a very, very bad thing.
Happened in France too, that resulted in a whole lot of wrench attacks.
Oh, that's right. That's right.
Yep.
That was really scandalous because those guys were like not just leaking it to the press, but they were doing it to prey
selling
on
it
people,
specifically
right?
to yeah.
So these so despite that, what's happened with the weaponization of federal agencies is, I guess this is probably starting to be historical information that sadly a lot of young people don't know, but all the early crypto people were threatened with prison. We were constantly, people talk about our bank accounts were constantly shut down. We were treated like, I don't know, like I would say a criminal, but criminals seem to do perfectly fine in this economy. Look what's going on in Minnesota. Here, we were abiding by all the laws, and they just made it very, very hard. So all the U.S. passport holders got out. That's the reason we're not part of it. And I would say, it's another reason why stablecoins did take so long to take off. It's a whole different episode we could talk about, but the consumer internet, from the dawn of the Netscape browser, 1995, or 1994, to like 2000, when we had a global stock market bubble, 6 years, it just fucking flew. Every industry, music, retail, finance, it was all being upgraded, right? Then crypto came along like 10 years later, and we all lived through it. Crypto could never break out of this straitjacket. That was put in place by the banks, who had looked very closely at what happened to like the music industry and the advertising industry, the newspaper industry, and they said, we're not going to let that happen to us. So they worked with the DOJ and the SEC and the CFTC to basically say, anyone in this space you need to deem a criminal. And it has kept innovation for 15 years. Now with the Clarity Act, which hasn't passed but will at some point, and then the Genius Act, which is to give regulations around stablecoins, you're going to start to see the growth. But here's what I would say to you, what was robbed from that. In every other technology growth period, early entrants, unaffiliated with any other industry, were able to come in and create a new industry. Look at every single industry. Video gaming is a great example.
Yeah.
It did not happen with crypto. And the reason is because the established financial institutions said, we're not going to let these guys get big. And what happens is, after a period of time, 15 years, they've learned enough about the tech that they can start to compete. If you look at the history of internet, what are the largest companies in the internet? Every single one was a native startup in the internet, and it became giant. That would never, I actually would argue it would be very hard to do that again. AI, who are the big companies in AI this time? It's all the established companies. So they've learned a playbook of how to use regulations to shut down competition among startups.
Yeah. If that's a tale and a playbook as old as time. I look at our foreign relations, our foreign policy as like just the United States. I have a biased view of that because that's the history I learned. But the history they don't teach in schools is very much the history of like, let's criminalize something until we can get our hands on it. And then we can regulate it. And then we'll own it. You know, we quash the competition. And that's why I'm worried about this thing.
Unless we can stop right at the squish it and then just collect lobby dollars to keep it squished.
Yeah,
like
but that, you know, why would we do that when we could standardize USB and then sell them forever? And yeah, not one of us is going to become a trillionaire, but all of us are going to become billionaires and ride off into the sunset with our friends. You know what I mean?
There are examples of us keeping things squished that we can collect the lobby. THC. There is no reason not to collect the tax revenue on that, but the only reason would be how much of a threat it is to the tobacco and alcohol industries, which is why it is still where it is, considering it's just a goddamn plant.
Okay,
yeah,
but
the lessons of the internet have been, you know, taught in business schools. The 40, 45-year-old executives now, they all use these as lessons. When a technology emerges, if we can't co-opt it immediately, we need to criminalize it. We need to regulate it. That has become the impulse of large companies. And this is why these companies are now worth trillions of dollars, and they appear to be unassailable. Like I said, if things work the way they used to work, AI would be the domain of all of these startups. And it doesn't work that way. The massive capital is mostly being accrued to the giant existing tech companies. And by the way, I don't know if you remember, what was the first thing that we heard? My ears clued up to it in 2022. Very quickly, AI people were going to Congress saying we should regulate this. Do you guys remember that?
Yes.
Like within 6 months. It was like, we need to regulate this, meaning we need to shut the door on potential competition.
It was immediate. And it always is. It always is in that regard, but it seems to have accelerated in the era of the internet. I am still hopeful. I am still hopeful and still a believer that the best incentives will win. And I think the side effect of more people paying attention, more people being connected, is that exclusive deals like this will leave more people behind. If there is a bigger audience and the in-group is still small, then the outsiders, I don't know, I think they can wake up, they can hopefully learn about solutions that haven't been regulated out of existence. And the great thing about blockchain specifically is it would be very, I'm open to pushback on this, but it'd be very hard, even if you regulate it. I'm sorry?
I thought you were responding to me shaking my head, which was not to you.
Oh, no. I wasn't. The lion does not concern himself, Alex. I was saying that, like, we would have a really hard time regulating an open network like Ethereum, for example. And I don't know that it's the best that we could possibly do, but it's a viable alternative model where maybe the incentives are more aligned between all users than like the OpenUSD network.
You know what I would like
stuff like that will win.
I would like you guys, let's focus on one particular area. And this is all about the permission part of it. Can anybody tokenize OUSD on their blockchain? That's what I want to know. Like I want to know when. Like, can anybody issue? Say again.
Like, can anybody issue the OUSD token? Like, if I'm Solana,
you know what,
I say.
When you tokenize it, I'm just saying a smart contract team goes and acquires $1 million of OUSD and
issues a token
and issues OUSD denominated tokens on any blockchain. Is that would be great, or is that not going to be allowed, right? And if it's not allowed, who enforces that? That's what I want to know, because I think it would be great. Because right now you can't just tokenize Tether. You need Tether's permission. You can't just tokenize Circle. You need Circle's permission, right? Hence why Make or Die was kind of a cool concept. But it's limited by the fact that you need blockchain-based collateral, which has its issues. But I would like to know, can anybody just tokenize OUSD and no one cares?
But my point is, like, maybe not legitimately could they do it, but I don't know. Maybe I'm being glib about this. I feel like it would be really hard to enforce that. If the common person, for example, if somebody wanted to do that, they got 1 million OUSD, they've obscured their ownership of it or locked it up in a smart contract or something. They've used cryptography to secure it so that the only way you're going to get it is if you torture me and I give it to you. I've got a synthetic asset that represents it on my blockchain that we all own. It's an open, permissionless, it's a true blockchain. It's sufficiently decentralized, and we are all using this synthetic token, and it is backed not only by actual OUSD, but it is backed by like the collective force of our belief and our will. Even if it's illegal, even if they try to crack it down, like it would be, what are you going to do? Turn the internet off?
Okay,
you see what I'm saying? Am I being glib here?
Yes, because remember, if you do that with Tether and you tokenize it on your chain, Tether says, you need to pay us the fee, and you don't, Tether obviously sees what address that money is in, and they just freeze the account.
Which is why I would never do that with Tether, though. But like, wouldn't you say it's a more competitive product to have a true blockchain, a sufficiently decentralized network, and then something like DAI, but better design, make our own money that we all own, backed by the collective belief of the people?
Way better.
So why don't we do it? I'm hoping we will.
Up until now, you've needed to have a dollar-backed stablecoin, which means you need to have a bank account with dollars, which means you need a bank to agree for you to do it. And up to now, that was gatekept. It was very hard to get that. Yeah. If OUSD has some kind of enforcement and compliance team that says, that's why I want to know how. Yeah. I would kind of like it if all the OUSD is in one, is under the control of one chain, right? And you just contribute that to that chain. I don't know how it's going to work though. But if they allow anybody to tokenize it, I'm pretty sure they won't, but if they did, that would be a huge plus for all of us. But more than likely, they're going to restrict who's allowed to tokenize.
This says here that this is being reported by multiple sources that it is an open source and openly accessible shared stablecoin standard. So anybody who's a partner business, I don't know what that means yet, can freely mint, redeem, and share in the yield. So I suspect it means, appointed by one of these 140 businesses. Maybe they open like a validator council or something like that. You probably have to apply. You know what I mean? They say it's open, but I don't think in effect it likely will be. Because why would they do that?
Right.
Right. Because they don't have to.
They don't have to. Yeah. So we'll find out.
Okay.
At the end of the day, if you have money, it needs to be in a bank. That bank has to allow and approve you to tokenize it to create OUSD. Presumably, all the 140 members have gotten approval from their member banks that they're going to be able to do that. It would be nice if one of the things that came out of this was OUSD said, if you comply with whatever the cooperative's rules are, we'll make sure you can get banked for your stablecoin. That would be an amazing thing.
That would be amazing.
Then every blockchain could have it.
Yeah, but
because they don't fucking have to.
They just might not. William, you've been really generous with your time. You always are. We appreciate it. And I'm going to let you go in just a second after maybe we get a final thought from you. There's a lot of stuff that I told Shirley we wanted to talk about that we didn't get. Like, I don't know if you saw that Michael Saylor admitted he basically had a chat with GPT in order to come up with the concept and whole business plan for his product Stretch. Did you see that?
I did.
He's the great Bitcoin mind of our time, apparently.
Hell of an admission, though. Yeah. Like, I don't know. I vibe coded the whole thing.
Is there anything that you are interested in right now, paying attention to, that we didn't get to ask you about that's on your brain that you want to share, or homework to give us and our audience to think about for next time?
And on that last one, Michael Saylor says a lot of stuff. Sometimes it's probably not like on point. I don't necessarily. It wouldn't be surprising that you would use ChatGPT to kind of organize your thoughts, but it comes across as I outsource my thinking to a chatbot. That's how we took it, right? Which isn't as good. As much as I dislike a lot of stuff about AI, I do think that payments, with agentic commerce, having a stablecoin that is at a settlement layer that's run by an AI that kind of like the next level of how APIs work. To me, that's a useful area for crypto. Like having this, this is sort of like the internet money idea that the AI systems are using a form of internet money. Maybe it's OUSD to settle transactions when they do work on behalf of the users. I do think blockchain has something for that. I think, as we've talked about, I think a couple of times, I feel like by 2021, innovation kind of stopped in blockchain. The big tentpole style innovation, the closest we got to something kind of cool was EigenLayer with restaking stake tokens, which, whatever. It was it's a nice yield
kind of
idea,
petered out.
Yeah, it did kind of peter out. So I feel like we haven't had a lot, but the AI angle could be one that would be good that I'd like to see us get to. Like people are always arguing what's the utility of blockchain? Well, stablecoins clearly, but the other could be real internet money used by AI systems. So I'm putting a fair amount of time just looking at that.
Are you familiar with Haseeb Qureshi over at Dragonfly?
No.
So do you know the Dragonfly team? Have you heard of them? Yeah. So they're venture. And Haseeb Qureshi is the managing partner there. He is most easy probably to hear on a podcast called The Chopping Block. It's one of the ones that Laura Shin and the Unchained Network produce. But he is they raised I think it's their fourth fund recently at the start of the year. And his big area of interest, he's spoken a lot about it, and you might enjoy engaging with his thoughts, is like, how are we going to fund and innovate around agentic commerce? And where does that intersect with blockchain? What kind of tools will agents need? What kind of internet native digital money are they going to prefer? What kind of containers will we house them in? Yada, yada. So I'll send you his ad, or I'll tag your Twitter in it or something so Shirley can see. But he's a thoughtful guy. He's enjoyable to listen to, and he's good to agree and disagree with. I really enjoy when I disagree with him because I always learn something, and I think you would too.
All right.
Alex, have you got a final thought for the audience or anything else you wanted to answer? I saw you going back and forth in the comments a little.
Yeah, it's off topic. It's just the acknowledgement of a conversation happening in the comments that I think is a good opportunity to just call out a couple things. And also just because we're losing a tremendous amount of context going back and forth in these comments. So I don't want to I was going to do this just at the end because I don't want to derail anything that we're finishing up here.
Let's do this. Let's let William get on his way. We'll thank him very much. Go eat your beautiful breakfast. I don't know what you're doing today, but it's probably sunny and gorgeous.
I'm going to get you that muffin.
Mark my words. We're getting you muffins and fireworks. Are you
blueberry
doing
or banana nut?
Independence Day, the 250th. Are you going?
Yeah, I'll do a boat around Miami. Yeah.
Cool, man. I hope it's great and that you enjoy yourself, and we'll see you again soon.
All right, guys.
Our friend and yours.
Good chat on this topic. Bye-bye.
Mr. William Quigley.
Good to see you.
See you later. Okay, take your time, Alex, and air your grievances.
No, it's not grievance. Honestly, my only grievance is that we have so restrictive character limits in comments here, because this individual whose username is right back at you in TikTok and I do love that. We're disagreeing on one thing, and then I think largely just arguing different sides of the same coin in the rest of it. So The topic of the conversation is ICP, specifically adoption and revenue. And they made several claims, one of which is grossly misstated. And that's my ask to you, right back at you. Please, I'm begging you to look up the specific government involvements and adoptions that you opened the conversation with, specifically with regards to the Swiss government and the Pakistani government, because I promise you that the Pakistani and Swiss governments themselves are not using ICP for anything. There are 2 exploratory programs that were opened by, in the Swiss case, a private consortium that is lobbying the Swiss government to look at a thing by demonstrating use of the tech in a small, confined, specific area that has so far gone nowhere.
Okay.
Great, fine. That's how new tech like this works. There's nothing wrong with that at all. There are tons of cases wherein agencies or companies or affiliates or individuals or consortiums, like this case, whatever, with regard to proximity to some government, are using a thing to try and prove potential validity. Governments do this all the time, looking for efficient ways to do a thing. Sometimes they work out, sometimes they don't. Okay? With regards to the Pakistani government, and I pulled both of them up right here for you, and this is what I'm saying, like, to please just look into
Nuance,
it, because
yes.
you are correct that both governments in some way could be construed as being partially involved with ICP. The problem again lies in the lack of recognition for nuance here. So just stating that both governments have adopted ICP is flat out wrong. We're grossly inflating what has happened. So talked about the Swiss one. Dfinity, the research institution behind ICP, the ones that do most of the development work there, they are interested primarily in research. That's what they've always done. Sale of the token funds their research, and then they issue grants to people interested in continuing their research or expanding it in a different direction, or building something in and around the ecosystem to use the things that they have already built. That's exactly how all of these things work. That's exactly what these companies do. They are a research institute, or they are a capital fund or something that has a blockchain product, and they will pay people to use it. Okay, they all do that. And 90% of them don't really work out very well. I use Stellar as an example all the time. Robust grants program, they paid a ton of people and almost nothing stuck. So that's what happened. The Pakistani thing, so Dfinity has an MOU, a memorandum of understanding, with, quote, Pakistan's digital authority to develop some AI-based blockchain infrastructure kind of thing. It is, again, an exploratory program that launched earlier this year. And the government itself is doing absolutely nothing with this. A piece of something in and around Pakistan that has something tangentially to do with the government is exploring potential use case in one way. It could work out. Both of these things could turn into an instance wherein the actual government is using it. But right now they're not, and there's really nothing to say that they're going to. So you can, okay, and now the follow-up. I'm very familiar. You're not wrong. I know. And neither am I. Yes, you are, because you misstated it to me and then argued with me repeatedly when I asked you politely to please just look it up. The next claim was that ICP is winning, or like way up there in the revenue conversation. And while I would say that there are a number that ICP is beating in the revenue claim, and I do want to acknowledge a couple disclaimers about ICP's revenue before we get into this. But here on the screen is a DeFi Llama pulled revenue report and statement about the top 20 blockchains or blockchain-esque things with regards to revenue, or just, you know, the biggest revenue producers here. ICP sitting at number 18, which in the grand scheme of how many there are,
Not so bad.
It's not so bad. It is also worth noting that I would call comparing ICP's reported revenue here in these capacities to something like Ethereum or Solana or Hyperliquid is not fair, because they both collect revenue in different ways. So, you know, for example, in ICP, where they have the whole, you know, reverse gas and whatever burn type of thing, they're not going to accumulate and earn fees in the same way that a more expensive to use blockchain would. Inherently, there will be more there. So you could also then include, on-chain app revenue generated by things existing and building there, in which case, again, we're still not at the top of the pile. So I'm not quite sure what we were going for here. Like, they definitely make money. It's reported right here, and it's extremely easy to fact check and verify. And going beyond this particular report, you could take this in any number of directions. And DeFi Llama has excellent reporting for all of the open source avenues that any protocol or blockchain or whatever that uses crypto or some blockchain component is earning any revenue. So, the follow-up claims then that like ETH and Sol are bleeding money comparatively. I mean, right here. Yeah, both of them have bled money for sure. I made the claim, which was kind of pithy of me to say, but I stand by it. ICP may not be bleeding as much comparatively because it's already completely exsanguinated. There's like not that much left to bleed. But even still, based on this 30-day revenue projection, they're down more than anyone else on the list. I would also say, while you and I do agree that price does not matter as much when we're talking about like who's using a blockchain to do this, that, the other thing, whatever, unfortunately, in order for a blockchain with a publicly available token to get any kind of real adoption or interest or whatever, the token has to be at least semi-interesting. And I can't think of a less attractive token to an investor than ICP specifically. And I would, again, have to concede that you're right about like how different companies and exchanges and market makers and all these different people participated in and contributed to the absolutely horrendous launch of that token. That's all fair to say. But unfortunately, we live in a world where things like that do matter. And so you can't just tell me that I don't care about price, look at everything else. So, there are so many instances wherein like I would look at ICP and I would look at Dfinity and I would look at the things they've done. I've applied for ICP grants. I know I have several friends that worked at Dfinity or still are there. Nothing bad to say about any of them at all, just that they don't give a shit about the token. They don't care about price at all. They're a research facility. They're interested in furthering progress on their work. And that's exemplified by a couple different exploratory programs in a few countries around the world. It would be also worth looking up to see how many other things the Swiss government is interested in, because their industry is money. They're interested in everything money related. They have exploratory programs with all kinds of stuff. So I know that this is like a one-sided conversation because you are still sitting in the comments limited by how many characters you can put in these things. But and I recognize that that's not ideal. I would say if you're interested, and you could leave immediately after, we do have a free community that you can join, and you have a lot more than just those character limits and a TikTok comment to say things. You could literally just come in, share your opinions, drop me a few extra links to look up and read, because I am interested in changing my mind if someone can convince me and I can be presented with some new information that moves the needle for me. I haven't seen any of it. There are undeniably really cool pieces of tech that are involved with ICP, things that the Dfinity labs have built and created and whatever that are arguably awesome. It just doesn't matter. Caffeine is a great example, which you did hold up. I don't know exactly what the claim is that no one is reporting about caffeine, because as soon as I looked it up, it was really easy to verify like what it is and that they, incubated or built it, and like that, all that's, I don't know, that they're not like hiding it at all. It's just, again, not moving the needle. And I would say it won't move the needle at all for ICP as a thing, especially as an investor is interested in it. So the fact of the matter is, to put a cherry on top of this whole thing, it unfortunately doesn't really matter who's got the goodest tech. And I don't know, there's a gajillion examples of that being true. So when it comes to something like ICP, unfortunately, a volatile, investable, and tradable asset like the ICP token exists. I would say that they would probably be in an exponentially better position if it didn't, but it does. And I think that there's probably a tremendous amount of companies and, crypto blockchain related things that hosed themselves by hanging the albatross around their neck that is a tradable, investable token, because it consumes every nature of your business to then just become this thing that has to pump the price of the token, or else you're a failure, regardless of whatever cool stuff you've done. So, I can leave it there. I hope that you'll like jump into a place where you can type more, because I've seen you, lament the character limitations, rightly so. It's awful. It's just kind of one of those things. You can maybe one day I'll be proven wrong and something about ICP is going to move the needle and that token's going to skyrocket again. I truly don't see it ever happening as an objective, rational person. But like I know a lot about it. I like it a lot. Like I said, some of my good friends are engineers that work at Dfinity. So like, I'm not a complete buffoon. I recognize that you are also an engineer and a developer, as you've mentioned. And my pithy reply to that, which I would again stand by in the, spirit of throwing jabs here, is that like, I'm a mechanic. I'm a licensed mechanic with years and thousands of hours of experience on helicopters. It doesn't mean I know how to fix a fighter jet. And so like, you being an engineer doesn't mean as much as I think. Like, I just don't like it when we hold up a specific, thing intended to be a credibility enhancer, and then, proceed to ignore other things. So like, you say, I'd love to talk to you. I hope you do. I'm looking forward to it. If you can't see the circle or whatever, then just DM me and I'll help you get in there and we can do it that way. Anyway, I appreciate the opportunity to ramble, but
3 things.
It's just one of those things.
First, from Soundboard Alex.
As you know, we are just 2 people sharing their opinions on the internet.
And
I will absolutely die on this hill.
if you would like to join the community and speak with Alex without character limits, he is generous with his attention. He is open-minded, I can confirm, and loves a good discussion or debate, especially when both sides learn. The link is community.rums.
I'm a teacher. The nature of being a good teacher is that you never stop being a student. So if I have the opportunity to learn something new, then I'm going to take it, because the last thing I want to do is like confidently say wrong shit on the internet. That's like humiliating and embarrassing. So if someone can prevent me from doing that, great. I'll jump on the opportunity like that. But I'm not so easy to convince. There has to be something, legitimately real that I can verify in more than one place. And it took me 8 seconds to figure out all that information about those 2 governments. So like inherently my hackles are up a little bit here.
Solom says, as an engineer myself, I can draw a plane on paper, but it does not mean it will fly. And going all the way back to YouTube, friend of the show, Dixie Fireboy, said about you, Alex, your final thought is, he wishes he joined the Navy. And I just got to give it to you, man. Dude, I almost had to interrupt the rant when like 5 minutes ago, you just dropped the word exsanguinated. Exsanguinated, for friends in the audience who said, huh, is the past tense and past participle of the verb exsanguinate, which means like to bleed out, to lose blood. And usually it's used for like life-threatening, severe blood bleeding out. Exsanguinated.
Yes, usually, yes.
So for the vocabulary check,
How about giving us some fucking credit?
don't ever.
I like words.
Don't ever come at us and say that we didn't just add a little value to your life by raising the bar on your vernacular, your vocabulary, your lexicon, your syntax. Okay. Well, Matt, that's a good final thought for now.
Yeah,
that was a great show.
That was a great show. I'm sad it's over, but we'll be back tonight.
We will indeed be back tonight, and we're coming back with Ryan Rasmussen. Get out your logbooks. He is from Bitwise. You want to talk about somebody advancing the intersection of crypto and TradFi? They're doing the work. Will got him in connection with us, and we're excited to host him for the very first time. Rise Up After Dark will air live at 8 p.m. Eastern. BYOB, DYOR, let your hair down. Come hang out with us. And if you can't make it, hey, did you know that at rumshq.com, we have got the links to our content on all your favorite socials. You can catch every show we do on YouTube, on your favorite podcast platform, on Facebook. And I am giving out little bits of Bitcoin and attaboys like candy for people who give us 5-star reviews on Apple Podcasts. So please do check out the shows there. We've got Morning Show, After Dark, Trust Issues, Market Watch, and the place every show lives 24/7 where you can go to argue with Alex is community.rumshq.com, powered by our partners Arculus and Jito. Don't forget to get a little Reposa coffee for your morning and then come back and hang out with us tonight. Until then, everybody, thank you for being the very best part of what we do. Stay safe, be Be well, my friends. Rise up.